Well, hello everyone. Welcome back to TwB Trading with Brian. Got a new trade idea for you today. Super excited about this name, Conagra Brands. Just tweeted out nice little overview of what we're doing, and then what I'll do here shortly. And keep in mind, I'm just sort of getting used to this new routine, trying to figure out what direction I'm heading in. So the first few of these are probably going to be a little bit awkward, but what we want to do is going to do up a blog write-up of that tweet that you just saw. And then I'm doing this video right now, and what I'll do is once this video is produced, it will be shared privately with the members of the TwB Substack paid membership community. And you can watch this overview at your leisure, which hopefully will put into context the write-up and, of course, the very simple blog post. So first things first, what the heck is the trade? I really like right now, I don't know whether I would call it consumer defensive, but let's call it just simply non-tech names. I like the idea that if we drop it on our foot, like a can of tomatoes or something, ouch, it hurts. I want nice, tangible products. So I put this tweet out. And what I found fascinating about this, of course, you know, Brian's a cheap ass by nature. So you know that I want to buy stuff down at the bottom ends of its ranges. And this is an interesting one. I don't know whether this is actually a valid harmonic. It's a little bit sloppy, but we do have a 786 here. Ideally, if this was a Gartley, we'd love to have, of course, drawn off at this point, not this point, but just for illustration purposes, I wanted you sort of thinking that idea that harmonically there is some sort of pivot down here. I have a funny feeling it's probably a bit lower, but I'm okay with these prices. Keep in mind the stock topped out at like 40 some odd dollars. Here we are down at less than half that. As well as you can see, just over the course of the past couple of years, it's carved out actually a very well-defined bearish, actually this is a bullish PRZ down here, and AB equals CD. There's the bot objective for anybody who's familiar with that bot setup. The ABCD, you can see that CD leg. And of course, we just slammed right into that harmonic. And lo and behold, what's coming up here? A nice little W in price. Always like that. So from the licks perspective, we have location. We've got a bearish harmonic PRZ. We also have a very long-term pattern. Keep in mind that these prices, this is back in like 2009, 2010. So we're getting this at a pretty discounted price down here. As you can see from all the indicator confirmation, we have a whole cluster of divergences that are all building here. 10 confirmed divergences down here in price. So we have the L for location, we have the I and C for indicator confirmation. And then the question ultimately is, do we have some price structure to work with to frame the trade? So to actually see that, we can just zoom in on the actual chart, and lo and behold, look what came in here today. So you know how much I love the letter W in the alphabet. And the good part about this one is not only is it an intraday W, we did trade up through this high through the day, but actually if we change this to a clothesline chart, hello, there's a nice big W there working as well. So I'm feeling pretty good about this from a technical perspective. As I had said earlier, one of the big themes that I like right now, and probably the best way to show you this is to pull up our sector rotation modeling. Of course, take advantage of stock charts deals. They're so awesome. If we go over to their free tools, maybe we won't indulge in their subscription. But we come over to their free tools and we look at the sector ETFs and performance, and then we take a look at the current quarter. So we'll move this over to October 1st. I think probably the first thing that jumps out at you, at least it should, when we look at things like the first 2 weeks study, you can see through the first couple of the weeks of the quarter, let's take it to, I don't know, somewhere in there. Who's outperforming? Staples, healthcare, utilities. And if that's the case, where does that mean we are on the economic cycle? Consumer staples, healthcare, utilities. So it appears to me like the market, of course, if you look at the broader stock market, it looks very toppy right now. The economy is sort of grinding on. The jobless numbers are starting to creep up. The Fed's talking about lowering short-term interest rates, those kind of things. So that definitely favors this part of the economic cycle. I mean, things are as good as they're possibly going to get for the broader economy. But the stock market, you know, the Mag 7, the leadership in the tech stocks, it's looking kind of toppy here. You know, any of regular followers of mine, of course, know I sold a whole bunch of the cryptos and stuff there over the past couple months. Sold Alibaba positions completely. Sold all of the Intel, all of those kind of tech proxies, taking profits on those. I really don't think that that's the place to be in the market right now. I think it's in this very conservative, very defensive part of the market. And the name that I'm interested most here today is definitely in the consumer staples department. If we go to the actual company itself, Conagra Brands, they own things like Birdseye, Marie Callender's, Banquet, Healthy Choice, Slim Jims, Orville Redenbacher, Duncan Hines Cakes, etc. I think it's a nice diverse basket. You know, obviously they have their own individual issues. They're carrying a bit of debt. They are paying a very, very high dividend right now, which I do think is probably in their best interest to reduce and pay down some of the debt. And ironically enough, if they do actually make that decision, my hunch is the stock will probably rally on that kind of event. If we look at the fundamentals of the company, not bad. I'm not going to say it's like it's a can slam where you're going to go, you know, get a 10x on your money kind of idea. I think it's a very well established, you know, consumer brands, packaged foods, consumer defensive. I kind of like that thinking. And of course, you know, Brian's a cheap ass, so you know, as all the tech stocks and stuff were going absolutely crazy, and, you know, Bitcoin was enjoying its rally and all that kind of fun stuff, these things were getting just beaten into the ground. But if we look at the numbers of this company, they're not bad. I mean, it's only trading at 10 times earnings. So you can't really say that this thing's ridiculously overpriced. It's trading actually below book value. You know how much I love buying companies at or below book value. Trading very competitive relative to its sales. Usually the number we want to see is that it's trading less than 2 times sales. This guy's trading less than 0.75 times sales. That's a great number. Price to free cash flow. They've got lots of money flowing in. The one problem with this company, if there is one, is I don't really like this debt. But at the same time, too, look at this dividend. This is insane. I'm more than happy to buy the stock here and collect this 7.8%, basically $1.40 paid out on, you know, a $17 stock. I mean, you can see what kind of percentage returns these are. I might argue that, like I said before, I like the idea of them actually cutting the dividend and just using that excess money to pay down debt. But at the same time, too, I don't know specifically what kind of rate they're paying on this debt. We might find that they were able to lock in some long-term debt um, through that 2021, 22 very low interest rate environment. And so as a result, their debt services are actually very, very low. And they might just not want to relinquish the debt because they've got such a fantastic rate. I really don't know. What I do know, though, trading 10 times earnings, that's very comfortable. And I'm more than happy to collect a 7.8% dividend yield, just sitting there holding paper as they're bringing money in. And the one thing I do like about these kind of companies is, I mean, as a consumer, I don't like it, but as a business owner operator, this is perfect in that we had an inflation shock there a couple of years ago. And now what's happening is people are just sort of accepting the fact that prices are rising, they're getting higher, which, ironically enough, to a company like this, that's music to its ears. So it's still going to produce the Duncan Hines cake mix at whatever the cost basis was. Now they just get to collect more income and more money for every package of Orville Redenbacher popcorn or Slim Jims or whatever. Their profit margins are going up thanks to this inflation. So I'm sure they're pretty happy about that. And it might be one reason why this thing is basing out and starting to look uppy. So I'm not going to say the stock is like ridiculously cheap. It's a 10x growth story. I mean, it's got a lot of shares out. Insiders, they own it, but it's not insanely large. What I do like is this is a nice, safe place just to ride out the storm in things like technology. And of course, regular viewers of mine know fully well what I'm expecting out of things like Bitcoin over the next year or so. So with that said, I went and pulled the trigger, bought some stock. Also, too, from an income perspective, we wrote some put options for the wheel strategy. And now that the stock's actually perking up nicely here, if we can get any kind of pop, I'll get in there and start writing calls against those long positions for the wheel strategy. But on top of the options income plan that I basically outlined, well, I don't know. You'll see it as time develops on TwB as sort of a primary offering that we have. I've actually gone and bought some stock as well for my registered account. So anyway, there's your nice summary. Hope you enjoyed that. PMA for the win. Slow and steady wins the race. All the best, and bye for now.